happens in effect is you go into a bank, you give them $500, and they put that into a CD. Then they might extend to you a credit limit that you could use, say for $700 or $600 or so, that you can then go out and utilize. That is a secured transaction. What does that say? That says to the bank, hey, we have some collateral behind this, and that reduces the risk of the bank. Again, you're trying to establish a credit file. So this is something that you may have to do on the front end just to simply let the credit bureaus and potential lenders know that you are, again, a man or woman of your word. You will repay based on the credit agreement, the terms of agreement. So even with a secure credit card, and even though it is collateralized by that $500 or whatever it might be that you put into an institution, each month you're going to be billed, and each month you're going to have to make a payment on it. Because what you're trying to do, again, is to establish a payment history. So you want, if the bill comes and maybe you charge something on it, the best way to really establish it is to make your payment, whatever it is, each month. I would say more than the required payment, because you want to show that, hey, not only am I doing what we agreed upon that I would do, but I'm actually exceeding that. Once you do that over a 6 to 12 month time frame, usually that is a way to establish that credit profile. So the secured credit card is an excellent way. We talked about maybe student. If you're a student, what might be out there for you, option of starting a credit file that way. Again, the lenders at that point are probably hoping that your parents are going to pay. Then there's a secure credit card, which again is collateralized by a certain amount of money that you already put up, so that they have more comfort in lending you some money. It's actually interesting, the whole concept of credit, especially coming from a banking perspective. Oftentimes when I talk to borrowers, and they want to express their, either pleasure or displeasure based on the decision that we may have made, I often ask them, if this were your money, would you lend it to yourself? And that's a question that, a lot of people don't pose, but if you think about it, people come to the bank and say, hey, would you lend me this money? But they don't think about, okay, given the information that you provided, in this case, we're talking about someone who does not have a history. So you're saying to the bank, hey, I don't have any track record, but I'd like for you to lend me money with no collateral behind it. And again, you ask yourself, would you lend money to yourself in that same, you're lending money to someone that you don't know, don't have a relationship with, don't know if they've ever paid anybody back before. It's really hard when you think of it that way to actually extend credit to people without credit files initially. So we talked about the students card. We talked about the secure credit card. One of the other ways is, and I actually did this for my son. When he was trying to establish a credit card, a credit file, my wife and I put him on as an authorized user. Okay, so if someone that you're close to is willing to do that, they can call up and establish the credit account that they have and put you or them on as an authorized user. That just says that that person can have all of the rights and privileges in terms of using it. They issue him a card, so you can use the card, you can charge it up, you charge it down. The payment history or the repayment history is documented on everybody's credit report. So that helps to, again, all you're trying to do is build that credit profile. So again, you have different ways to be able to build it, and so you want to leverage those to try to get that out there. And then once you establish it, say you might want to call back and maybe request an increase of the credit limit. A lot of times when you're new, the lenders tend to be very conservative in the amount of credit that's extended. And so they want to, you may want to, after you show a documented history of, of payments, then you may want to call back, because again, as you grow in your credit profile, the larger the items that you may have, that you may have applied for, it'd be easier to go out and get even higher credit limits once you show that you were a steward of that at the smaller amount. It's like they say, be faithful over, small things, and big things will be, given to you. So it's the same way on the credit side. So let's talk about that same concept, but let's just flip it just slightly to the business side. The business side of credit is very similar in that it's really hard to get things in a business name without that same track record. And so some of the same resources are available to you in order to establish it. But it's one thing that, I tell small businesses all the time is that you as the owner are the business. It's not separate. So, when you have huge corporations, they can go and borrow money, and any of the principles related to that business is not on the hook. Is not a guarantor or anything. But a small business, in a small business sense, you are your business. So it's hard to get credit on the business side in the business name, and it's extremely hard to do that if you, the guarantor or the owner of the business, don't have good credit or credit profile that's established already. So some of the things that we talked about before, there are business credit cards that you can leverage to on a secured side, like we talked about before. Put up some money to collateralize it, and that way the lender is willing to take more of a risk. Now, your personal credit, you know about Equifax. There are 3 credit reporting agencies. That's how things are tracked on the personal side. Typically, on the business side, some banks utilize what they call it a DNB score, and that stands for Dun & Bradstreet. Dun & Bradstreet is sort of the equivalent to an Equifax as it relates to business credit reporting. So a lot of people report there, so it could be vendors, things like that. Anything that's your landlord, any of those people that basically are giving you a service or extending the ability to rent from them, leases, all those type of things, a lot of times end up showing up on a business credit report. So once you establish that business credit, a lot of times, usually leveraging your personal credit, then you start to build that same profile that we talked about on the business side. On the personal side, we start to see that on the business side as well, and that makes it that much easier to do more and to actually gain more when it relates to getting higher credit limits, things like that. In everything, again, your word is all that anyone can go on, and so when you're thinking about that, it's better to just continue to pay as agreed, because it just makes it even easier. It's sort of the gateway to doing, you know, bigger and better things. I'll tell you a personal story about me, just on a personal credit side. I mean, when I was younger, my grandfather always taught me, hey, pay your bills, pay them on time. And when I got to college, I just remembered, um, you know, when it came time to register for class and things like that, you know, because of loans and other things, but whatever portion my parents had to pay, my grandfather paid that on time. And so I didn't have to stand in line or wait. It wasn't like I couldn't get the classes that I needed to get when everybody else who didn't take care of their business, you know, it was always a crapshoot for them. So I'm saying all that to say is, just like on the personal side, it's so much easier. When I went to get a car, I was able to get a really nice car with no money down based on my credit history. The same thing happens on the business side. Um, the way we underwrite loans on in the commercial side is we actually look at the business itself. We look at the business credit. We look at the business's ability to repay. And we look at all of that via, you know, sort of the credit reports, and like we talked about the Dun and Bradstreet, and we look at, you know, the ability to repay from tax returns and things like that. But it's very, you know, easy when we're writing up a credit file. When you see a 800, when you see a 750 of the owners, because that what that says is, hey, if this person manages their personal credit to this degree, this gives us a sense of comfort that they're going to utilize those same characteristics in terms of repaying a commercial loan. So they run parallel, especially in the small business space. Now, sometimes there may be situations where we do see where the personal credit profile may not be as strong as we would like it to be, and it may not necessarily preclude someone from moving forward on the commercial side if the other avenues that the other criteria that we look for and check are just extremely strong. And then maybe we can have someone explain what happened when they had a challenge or challenge situation on the credit side. One thing to remind you on the business side and the personal side is to monitor your credit. There are a lot of a lot of fraud is out there right now. They have credit monitoring services and things like that that can, you know, give you a heads up when your credit profile is accessed. So you want to make sure you do that clearly with things out there, you know, identity theft and all those type of things. It can really be a headache when you're trying to do the right thing and maintain and pay your bills on time, and then you have someone who's you know, trying to access it you know, for negative. So when you're establishing initially on the business side, certainly you have to get your own tax ID number, because that's separate from your social security number. All the business items that we talked about, maybe a lease or something like that, you want all that to be under that particular tax ID number so that you build that credit file. The last thing I'll talk about just in general is, you know, is that on both the personal side and the business side, from a banking perspective, you may or may not heard of it, but we consider 5 C's of credit. 5 C's of credit. I'll list them and then I'll talk about each of them individually. So the 5 C's of credit are character, capacity, collateral, capital, and conditions. So those are the 5 C's of credit. I'll say it one more time: character, capacity, collateral, capital, and conditions. So let's break those down a little bit. Character. That's kind of what we talked about. We've been talking about the most really here is your credit. It's again, is you saying, hey, if you lend me money, I will repay this the way that we agree. So if my payment is due on the 5th and you give me 5, days of grace period, I'm going to pay it from the 5th on between that and those 5 days of grace period. Anything beyond that is not what we agreed upon. And so usually financial institutions don't make a big deal about, late payments that are between maybe a day late up to about 20 days late. I mean, they'll call you, but it posts to your credit usually when it gets to about 30 days late. At that point, you start to get dings on your credit. And what that says is that, your character, your financial character starts to become in question because you're not doing what you said you would do. Certainly, there's obviously situations that preclude folks from doing that. And I know on the mortgage side, they have you write letters and things like that. And sometimes on the commercial side, we've seen where, divorces and, things like that do take a hit. And we just ask that be explained away. But all in all, the character piece of it is just, hey, are you a man or a woman of your word? The second one is the capacity. Capacity really is just saying, do you have the ability to repay based on your income or based on the business's income? So, like I said, we will look at, I guess on the consumer side, we look at W-2s, we would look at tax returns, things like that. We look at pay stubs to determine how much money are you taking in? And then we would evaluate that against the request of the loan. And then we would say, do you have the capacity to repay, basically? And we look at, on the consumer side, we use a ratio called the debt to income ratio. And that's just like it's saying, you have a certain amount of debt and a certain amount of income. And we usually want the income to be pretty, to supersede the debt by a good amount, so you can have some cushion just in case something happened, you had some unplanned for expenses or emergencies or things like that. And on the business side, the capacity is similarly evaluated from tax returns, from financial statements, profit and loss and balance sheets, things like that. And it's exactly the same thing. We want to see that your income on the business side, and that's when we look at tax returns, we look at sort of the net income, and then we on the business side add back what we consider non-cash expenses, not to get too in depth, but like depreciation or things that you put on your tax return that that's not really money going out. It's just more of a way for you to limit what you can show as income, to reduce your tax liability. So we add that back to help to show, hey, they have more capacity than this net income number. But again, that capacity is simply the ability on paper to repay. And that's really tricky sometimes with business owners, because business owners like to show that they aren't making 1 cent. I'm negative. I'm not making anything. And so while that's great as it relates to the tax man, it's not great when you come to the bank, because again, we need to see that you have the capacity to repay. And if you show that you're negative, then that's saying you don't have the capacity to repay. So oftentimes when you're seeking credit, or you know that you will be seeking credit, talk to your CPA, talk to your financial professional to give you the guidance to tell you, okay, you know what, next year I'm going to buy a house, or next year we're going to get a building for our office. So we want to do some things to tweak to make sure that we show that we have the ability to repay on paper. All right, the next one is collateral. Because we talked about character, we talked about capacity, and now we'll talk about collateral. So collateral is it's really in place for the what if, okay? And it makes the lender feel better that you know what, it makes the lender feel better that if things don't go as everybody plans for them to go, that there is some recourse for the lender to have. So on the consumer side, what would be considered collateral? If you're doing a car loan, the car will be considered collateral, right? Hey, you make your payment every month, everything's fine, no issues. You just pay every month. If you get behind, you don't start making payments, someone might come and pick up that car. And that's the only way for the bank to try to recoup the potential loss that they would incur of you not repaying. So that's the collateral, the car. Just like in a mortgage situation, it would be your home, and the same thing there. If you don't repay, it would be foreclosure situation. So that's the exact same thing on the business side. Collateral could be anything from, like we talk about, buildings, vehicles. It could be equipment. It could be cash. It could be marketable securities, like you have monies in an investment fund. Sometimes we take assignments on that and can lend against that. But all of those things are in place purely as a just in case. The bank can recoup their money if things don't go as planned, right? So character, capacity, collateral, capital. Capital is really about simply it's your skin in the game. That's what capital is. So if you go on the consumer side, if you go and buy a house or try to buy a house, the capital is your down payment. What amount, usually there's a threshold, there's a percentage that someone wants you to put in to say, hey, we're not all going to lose if this thing goes bad. You're gonna lose something, and we're gonna lose something. Do you have the capital to put down on a home? On a car situation, it's the down payment as well. Same thing on the commercial side. If you're buying a vehicle, if you're buying a building, or if you have a startup business, even the bank wants to know, okay, cool, we will partner with you, but what is it that you have to lose? Because usually if there's skin in the game for everybody, then you would do a lot more to try to save the business and do what you can to see the business to success. And then there are the conditions. So character, capacity, collateral, capital. And the fifth is conditions. And conditions is really about factors like the loan term and the interest rate. Obviously, in today's environment, interest rates are really low on the mortgage side. Well, their interest rates are low on everything right now. So that helps the ability of people to purchase more. You can get a larger loan for a car or afford more of a house when the interest rates are really low. Conversely, when rates are really high, then it limits the amount that you'll be able to afford. So so the conditions matter. Right now, conditions are good for borrowing. If you on the other side and investing, you're like, oh, the banks aren't paying us anything on our investments or my money in my checking or savings account. That's the other side of the coin. But on the borrowing side, you do have the conditions that can determine how much you borrow. So just in recap, we talked about the credit. What is it? It's an IOU, and it's you being the man or woman of your word, and actually living up to the agreement that you said. Ways to build credit. We talked about on the consumer side, secure credit cards. There's student cards if you're a student. We talked about being a authorized user, and then once you get the card, then to request maybe limit increases to further your credit file. Same thing on the business side, the secured route, it works as well. And then we ended up talking about the 5 C's of credit: character, capital, collateral, capacity, and conditions. So hopefully you all are able to learn something out of that. The title of this was "Give Yourself Some Credit." So definitely give yourself some credit for even showing up to the event, and hopefully you're armed with some more information that will allow you to go out and seek credit. Thank you. I appreciate you. Appreciate your attendance.